Good afternoon, folks. I know you've been on the edge of your seat waiting for this video all afternoon. I apologize that I'm late. However, let's move on. Hope you guys had a great day. Nice win towards the end of the day. A couple of day trades that we did online via Telegram. If you are in the alert room, I'm going to do more of these. I feel like a lot of you responded very well to the idea. There's some screen sharing and voice trading, I guess. So we'll do more of that tomorrow. All right. So the question today that is on everybody's mind is this another CPI run up, right? We saw the same thing happen in September, beginning of September, and we're doing it all over again. Lower highs, obviously, for now. So we'll see where we're going. But we are expecting next Thursday, 8:30 a.m. Eastern, core CPI at 6.5% as the forecast, and the year-over-year CPI is 8.1%. Mind you, we came in at 8.3% last time, and that caused this S&P 500 to dip 12%, my friends. So this was a CPI on September 12th. We all remember that. And then it was swallowed by all the way in about 2 weeks or so, fell about 12.76%, which puts us, which hit our bottom at 3,500, 3,588. And we are now running up again in anticipation of a lower inflation rate. Who knows at this point, right? We were all wrong. Well, at least I was wrong on the 7.9%. But going into this particular print, housing is obviously going to be looked at, rental, right? Shelter, medical, is food costs going down? At least here in California, the gas prices are rising again. Well, of course, that won't show up until November, December CPI. But we're looking at September CPI going into this month, and things aren't looking better. So I'm going to speculate that at some point, if we continue this run, we're going to see another sharp drop, folks. If it comes in at 8.3% again, if it comes in a little higher, that tells us that inflation is sticky and it's just not, it's stubborn, right? So again, the forecast is 8.1%. If it's in line, I think we chop around. But if it's 8.3, 8.5, God forbid, that means it's really bad, all right? And causes the Feds to hike more rates, potentially another 75 BPS in November, or even worse, right? Or even 100. So we'll see what that all looks like next Thursday. All right, that's next Thursday. So we still got a week ahead, about 6 trading days before that. So if assuming that this is the top of this run here, all right, we broke through 3792. No, we hit 3806. Yeah, we broke 3,800 resistance, okay, and pulled back pretty sharp towards the end of the day. However, nice bounce towards the after hours. But if we fall again another 12%, that puts us to S&P 500 towards the 3,300 mark. And that, my friends, could be that final capitulation or even a leg down. So we'll have to see. All right. If you look at the weekly chart, okay, the weekly, for sure, it looks like, right, if we're looking at COVID lows here, all right, it looks like we're retesting this trend line, all right, which would be 3,900s, all right, 3,950 would be the top of this. So I do expect that between now and next week, we're going to see 3,900 SPX, S&P 500, and then we'll chop around there waiting until the news. So remember that Tuesday, Wednesday, all right, next Tuesday, Wednesday, it's going to be some serious choppage left and right until the data comes out. So maybe in the next Thursday, Friday, and Monday, we get that nice run up before consolidating, and we'll wait for the news. All right. So that's the S&P 500. Let's go ahead and go back to our handy dandy Qs. All right. Crazy day, right? Whoa, jumped up 282. We gapped down to dump and fill this gap, which is, I mean, you just had to expect that, right? At some point, they're going to fill this gap on a downside to trick all the bears. And guess what, folks? Right? We filled the gap, but we didn't, right? So there's still that a little bit downside. There's about 50, 60 cents below today's low to fill that gap. So we haven't filled it. All right. Something really bad has happened tomorrow morning for us to dump back down to 275. However, looks like a nice run up today, right? Hit that 275 and never look back, hit 283. Now, what's interesting is that you know, when the Qs and the SPYs, when it hits a certain resistance and it reattempts multiple times, what I've found in history or the pattern is that eventually on the second or third try, it starts breaking through, right? So it broke through finally the 283, 282.50 mark, and then went to 284 almost. And then we had a sharp pullback. Okay. Whoa, what's up with the Qs? Why are we jumping up on the Qs here? But I have that. Remember, I said yesterday in my video, 285 was the goal today. We hit pretty darn close. All right. Not quite 285, but 283, 83, 280. We'll just round it up, 284. All right. So that EMA 21 is now an attraction point. It's a magnet. All right. So let's see how the market reacts tomorrow. Certainly, we might see another dip back below, maybe an MA 200, 280 here before a retest of today's high. And also, and guys, we're above yesterday's high, by the way. Okay, well, not quite, but 382 is where we want to be. All right, and so 285.45 is the upside. Like I said, I do expect at least for the next day or so or two that we're going to continue to see this pre-CPI pump up. The problem is once it gets into 34.50 here, this is an area where we probably should start looking at puts because why? Once this particular jump move on the Qs back in September, once it hit that 311 over EMA 34.50, it dumped from there. So this is probably an area to look for puts in this area. Obviously, if we get there, we'll see how conditions are over the next couple of days. So that's what I got for you guys today. I hope you guys enjoyed the trading session.